Hi everyone, it's Tim, broker owner here with Safe Money Retirement. I get a lot of questions about how should I best leave a legacy for my family that's left after I'm gone. Well, by far the best way to do that and what makes the most sense is to do it through some form of life insurance. Planning for your legacy and leaving life insurance for someone is brilliant because you can buy policies for basically pennies on the dollar as opposed to leaving them a chunk of change. Another thing to think about, if you leave someone now with the new Secure Act of 2019, if you leave someone a retirement account that's qualified money, which means it still needs to be taxed, now they've only got 10 years to withdraw that money and they have to pay taxes on it every time they withdraw. So that can increase their tax rate, moving forward. And anyway, so by far the smartest way to leave a legacy is through some type of life insurance. Now I'm just going to give you a quick overview of the different types of life insurance. There's a lot of little subcategories and I'm not going to get into all that because this could be an hour long. Basically, at a 10,000 foot overview of these products, there's term products and there's whole life products. I'm going to explain the difference in the two. It's exactly what they sound like. A whole life product is exactly that. It's a product that you have got for your whole life. Some of them go to a certain age, some of them go to whenever you live to, but they're not ever going to go away. They're a whole life product. There's like whole life to 95, whole life to 100, whole life period, and no matter how long you live, and you'll always have that policy. Now they're a lot more expensive, a lot more. Can be 3 and 4 times more than a term policy. But you know that it's going to be good for the rest of your life. Plus, a lot of those products can build up cash value. So it can be a way over time. Now, this isn't something that's going to happen overnight, but over time, it can be a way where you can build up a pretty good amount. And then you can take loans off of that at 0% interest. Here, people talk about having a tax-free retirement. A lot of them are using life insurance to do it. Now, there's several different ways that it can be set up. Like I said, I don't want to get too deep into the weeds. We can discuss that individually whenever that we meet, but just know that there are whole life policies. They basically last for as long as you're going to live, and they're much more expensive. Now, versus that, the other option is a term life policy, and it's exactly what it sounds like. It's for a term, 10 years, 20 years, 30 years. That's one way to look at it. And another way to look at it is that it terminates. So if you had a 20-year term policy and you died 1 year, if you died 20 years and 1 day, or 21 years or whatever, if you die anytime after that term, you're not going to have any benefits. The benefits are only valid during that specific term. And the older you get, the shorter that term can be. We're not going to have a 72-year-old man and be able to write a 30-year term policy on him. That doesn't exist. So as you get older, the length of the term that you can do shortens. So that's basically, in a nutshell, the two types of life insurance products, and they are by far the smartest way to plan for your legacy and what you want to have happen once you're gone. Now, there's smaller policies called final expense that you can get that, they don't have a very high price tag, and basically they're going to pay just for your burial and all that kind of stuff. There's a lot of different ways that we can set this up. There's universal life policies that can be indexed and tied to a market index, and you can make money there. Like I said, there's a lot of different variables, but as an overview, best way to plan for your legacy and leaving a legacy is with life insurance. Talk to someone that's completely independent, that's a certified financial fiduciary, that can help you find your best fit, and then decide, do I want to do a whole policy? It's going to cost me a little more, but I know it's going to be there forever. Or do I want to do a term policy that's going to be for a certain set period of time, and then I'm going to have to do something else? I'll tell you, in most cases, the term policy is what makes the most sense because they are so much less expensive. And in most cases, if you got a term policy at 52 for 30 years, that covers you to 82. So, I mean, that's kind of, a normal client. Any questions, contact me right through the website here. I'd be happy to ask them, or happy to answer them. And thanks, everyone. Take care.